Hello everyone and welcome to 3 Charts in 1 with me, Richard Perry, market analyst for INFINOX on Wednesday the 7th of December. Now I'm going to be looking at euro dollar, looking at the oil price and S&P futures today. So let's straight into it with the euro dollar chart. Now what we've seen is this run higher, this acceleration through resistances, having broken out through 102 big figure. It's been finding higher low supports frequently and higher highs and moving towards a test of the primary downtrend. Let me show you that on the big chart. This primary downtrend we've got on euro dollar, which has been in place since May 2021, and that's been tested. Now, market has just shied away from that as the RSI hit 70. We saw that a few weeks ago, and that then produced 3 negative candles before finding support. Again, about a week ago, 2 weeks ago, 3 negative candles before finding support. So there is this sort of precedence of having this little near-term corrective move back into support and then finding the new buying pressure coming back in. You've got the reaction low of payrolls Friday coming in around 104.30. Again, those old breakout levels are supportive. So old resistance becomes new support. So you're in that band now. And you're looking at this reaction low here, 102.90. Anything as a higher low above that, I think, is a buying opportunity. It's just unwinding this RSI at the moment back towards the sort of mid 50s. And it's actually potentially an opportunity, but we need to find support first. We need to see the support coming in. If the support does hold, then we can see that as a buying opportunity, and we can see a test of that resistance at 105.90 area, 106. If I zoom out here, 106.15 comes in as the next key level of resistance before 107.85. But certainly it looks like a positive move for now, as long as the support does start to hold. But there is a little bit of a dollar rebound underway at the moment, but it just depends on how far it goes. So onto this oil chart, a breakdown on oil. What we've seen is this trending move lower, and it's now broken below the support again. 81.40 was the support of the reaction low last week or just before, and it's now been broken decisively on a closing basis. And you go out a few levels on the daily chart, and you can see that we're at levels not seen since sort of January 2022, maybe even sort of, yeah. So it is obviously moving lower, and you can see that this downtrend is in play. You've got the moving averages which have turned lower and given a death cross there on the 21 and 55 day moving averages. But RSI is a bit stretched, that every time it sort of gets towards this sort of 30 level, it does tend to see a little bit of a technical rally. So that is something to bear in mind. The fact that it is a bit oversold or approaching oversold levels, overstretched levels at least, and it could see another near-term technical rebound, similar to what we saw last week or just before. And yeah, we saw this rebound and a couple of days of sharp gains, but then finding resistance at this downtrend. You've also got the 21-day moving average as well. So you've got the resistance initially overhead 81.40 to 82.55, sorry, 83.55. That is the initial resistance band, this purple area, to capture a technical rally. But the downtrend is also something to keep an eye on as well. But it certainly looks as though this market is turning corrective increasingly, and a move to the downside could be seen. And finally, on S&P futures, well, we have now seen a break of the uptrend, this recovery uptrend that has been in place for the past 6, 7, 8 weeks has now been broken. And 2 decisive negative candles in a row. Depends on how the market now reacts around this breakout support. This old breakout level that came in around sort of 39.25 to 39.35 area is supportive, and it's holding for now. And the RSI is back to 50. So it's not necessarily yet a corrective move, a decisive correction. How the market reacts to this breakout support, which has held the little corrections in the last couple of weeks, if the market now closes decisively below that, you start to turn corrective. That moving average is now starting to roll over slightly as a warning signal, so that's again something else that we need to keep an eye on. But I think, bearing in mind we've had the reaction low, I'll put the 39.12, that reaction low that we saw a couple of weeks ago. If that gets broken, yesterday's low 39.21, if that 39.12 level gets broken on a closing basis, I would say that it's sort of topping out and then starting to certainly lose that I mean, it's certainly questioning the recovery and potentially turning corrective again. So this is sort of on the brink here on S&P futures. Looking on a 4-hour chart, had a spike low yesterday. It's just consolidated overnight, but needs to now start to pull higher. You can see on this 4-hour chart, if I zoom out one level here, you've got this sort of basis of resistance overhead, a bit of a sort of a pivot area coming in at around the 4,000 area, just above 4,000. So that needs to get broken to the upside to really start to generate some more positive momentum as well. But yeah, for now, it is looking a little bit on the brink. So I wish you good luck in your trading today, and I'll speak to you soon.